Okay, we need to talk about China and its most recent stringent and unequivocal ban on cryptocurrency yet, and whether it's simply a desire to hold onto the traditional Chinese financial system or if it's something more. Is China manipulating Bitcoin to undermine the US dollar? Now, before you dismiss this as tinfoil hat hokum, consider that this very sentiment was uttered by one of America's most prolific venture capitalists, Peter Thiel, back in April. But we'll come back to that. Last Friday, September 24, China announced a blanket ban on all things pertaining to cryptocurrency. These include all cryptocurrency trading, crypto exchanges, and crypto mining. While this is the latest of many efforts from the Chinese government to put their foot down when it comes to banning digital currency, it is indeed their most bound and determined effort to date. Along with the People's Bank of China, a further 9 governmental and law enforcing agencies have hopped aboard the crypto control train to tighten the reins on the blockchain-related digital asset space. Who knew Chinese investors were so out of control that they needed 10 governmental agencies, including the central bank, financial, securities, and foreign exchange regulators, to stop them from the threat that is cryptocurrency? That must come as such a surprise, given how much China loves a free market. Sorry, I couldn't deliver that with a straight face. But here's a quick little rundown of how China's economy works. Despite originally being what might be labelled a socialist economy, China has in recent decades transformed into somewhat of a socialist-market economy, which essentially means it attempts to ride the fence between a collective economic market and a purely capitalistic market approach. What this means is that private companies, investors, and entrepreneurs are able to make a profit, but only within the confines of the legislative controls that the state imposes upon them. Meanwhile, the whole system of cryptocurrency aims to eliminate third-party interference, from banks to governmental agencies. You can see where this is going, right? The idea that China would approve of a system where cash can freely exchange hands privately from citizen to citizen without the need for a third party is, even in the year of the pig, the day that pigs will fly. That being said, earlier this year, China announced plans to develop a blockchain-enabled digital version of its currency, the yuan. Now, this has caused some rumbling in the corridors of Washington amid concerns that the US dollar's status as the global reserve currency is now under threat. Furthermore, this latest mass crackdown is seen by some as a geopolitical attack on the US dollar as China attempts to elevate its own digital yuan. For the last decade or so, China has tried in vain to weaponize the euro against the US dollar in matters related to foreign trade, especially the purchasing and trading of what many consider to be the real global currency, oil. This attempt has been far from successful, however, as currently 90% of foreign exchange transactions involve dollars and more than 60% of all global central bank reserves are held in dollar-denominated assets. Earlier this year, Josh Lipsky of the Atlantic Council went as far as to describe China's move to create an alternative to the US dollar for foreign trade an issue of national security, telling the Wall Street Journal that China's attempt at creating a reimagination of money could shake a pillar of American power. So the question is China's latest blanket ban simply in line with its authoritarian economic policy? Or is it a calculated move to undermine the US dollar and in turn shift the power of geopolitical economics in its favour? Which brings us all the way back to Peter Thiel and the comments that he made in April. For those of you who might be unfamiliar with Peter Thiel, he was the co-founder of online payment giant PayPal and was the first outside angel investor on the social network platform Facebook. He's one of the world's most well-known and well-regarded venture capitalists. Thiel has historically been very pro-crypto and has even described himself as pro-Bitcoin maximalist. However, in an appearance at a virtual event held for members of the Richard Nixon Foundation, Thiel didn't mince any words. He flat out said that Bitcoin should be considered a Chinese financial weapon against the US. Quite the warning. So is it really cause for concern though? Well, there are those who believe that while China would love nothing more than to destabilise the dollar, it's unlikely that a digital yuan would support that end. Eswar Prasad, the former head of the National Monetary Fund's China division and economics professor at Cornell University, argued that it's tough to imagine a digital yuan having a detrimental effect on the dollar, given that the vast majority of cross-border payments for trade or finance are already digital. Prasad highlighted a more pressing concern for the US was the introduction of China's cross-border interbank payment system back in 2015. He said that this, in combination with a digital yuan, would make it simpler for countries facing US sanctions, including Russia, Iran, and Venezuela, to be paid in yuan for oil or other exports. Meanwhile, Bitcoin bulls seem unmoved by China's latest crackdown, despite the price of Bitcoin dropping 8.9% immediately following China's announcement. Founder of crypto storage provider Ballet, Bobby Lee, tweeted on Friday that China's banning of Bitcoin is always followed by a bull run for the world's largest cryptocurrency. You gotta love the Bitcoin bulls, right? They keep things nice and simple. Meanwhile, a calculated attempt to shift economic power on a global scale may be occurring, so watch this space. I'm James Preston, reporting for Kalkine, and if you enjoyed the information contained in this video, then you know what to do. Make sure to like, share, comment, and subscribe, and of course, don't forget to press that bell icon. For more information, just head across to the website kalkinemedia.com.